Happy Monday, everybody. I hope you had a good weekend. I hope you had a great Father's Day and are ready for another week that promises to be action packed, or at least so it seems. As I'm sure everybody knows, we enter this week sending our prayers once again, or still, to Israel and all that's going on in the Middle East. Last week ended with way too much going on, and this week looks like it'll start on the same footing. Today is June 16th, 2025, and this is your Monday market update. Now, upcoming this week, Juneteenth on Thursday, markets and offices will be closed. Before we get to that, let's recap last week. Now, after a relatively calm start to the week, U.S. markets took a sharp turn as geopolitical tensions flared and economic data added fresh uncertainty. It was a week that saw inflation cool further, but investors still grew cautious heading into this Wednesday's Fed meeting. Let's take it day by day. Markets started the week on Monday on a quiet but constructive note. Hopes around renewed U.S.-China trade talks in London supported risk sentiment, while the New York Fed's Consumer Expectation Survey revealed a drop in near-term inflation forecasts, a positive development ahead of the CPI release later that week. President Trump expressed optimism on the trade front, saying he was happy with the progress and hearing good reports out of London. That tone helped lift stocks modestly, even as the S&P 500 remained near multi-month highs, and the rally did show some signs of fatigue. The Dow was nearly unchanged, the S&P up 0.1%, the Nasdaq up 1/3%. Markets found some more momentum on Tuesday thanks to a solid NFIB Small Business Optimism Index and continued enthusiasm around the trade talks. Optimism was briefly shaken by a sharp midday drop when false reports claimed the U.S.-China discussions had collapsed, but the rumor was swiftly denied and stocks rebounded by the afternoon. Commerce Secretary Lutnick provided some reassuring comments late in the day, saying that talks were going really well and that an agreement could come soon. Now, that did trigger a short squeeze higher into the close. The Dow was up 0.25%, S&P up 0.5%, and the Nasdaq was up 0.2%. On Wednesday, markets opened strong after the CPI came in cooler than expected, headline and core, both of them. Stocks gapped higher at the open, briefly reaching 4-month highs, but optimism did fade midday as markets digested the lack of concrete results from the U.S.-China trade meetings. Although a framework agreement was announced, it still required approval from President Xi, and that was not taken as a given by this markets. Tensions escalated further after China imposed a 6-month cap on rare earth export licenses, stoking fears of renewed trade retaliation. Strong 10-year Treasury auction did help limit the losses, but geopolitical jitters crept back in. The Dow was flat on the day, S&P 500 down 1/3%, the Nasdaq was down 0.5%. Markets bounced back on Thursday on dovish inflation data and softening labor market indicators. The May PPI report matched estimates, and initial jobless claims ticked up to 248,000. That's the highest since August of 2024. Combined, though, they increased the odds of a fall rate cut and pushed Treasury yields lower. Still, the session was anything but calm. President Trump threatened to impose new unilateral tariffs on autos, and geopolitical nerves were frayed by an ABC report that Israeli military action against Iran was imminent. Despite those overhangs, markets rallied into the afternoon on dovish Fed expectations and a strong 30-year Treasury auction. The Dow was up 0.25%, S&P up 0.5%, the Nasdaq was up 0.25%. Geopolitical shock hit Friday morning as Israel launched a major missile strike against the Iranian nuclear and military facilities overnight. Global markets dropped on the news, with oil spiking more than 8% intraday and gold jumping nearly 2%. Despite fears of broader conflict in the Middle East, investors dialed down the panic as the day went on. Risk assets stabilized somewhat on the view that escalation might be contained for now. However, this ended the 3-day rally and pushed all the major indices into the red for the week. For the day, Dow was down 1.75%, S&P down 1.25%, the Nasdaq was down 1.25%. Friday's move, as I mentioned, pulled the indices all into the red for the week. The Dow was down 1.33%, S&P down 0.5%, the Nasdaq was down 0.2%. The week pretty much ended with a lot of anxiety, and it did not get better over the weekend. For this week, let's look at the schedule, then we'll talk about some reality. With geopolitical risks simmering in the background, investors now turn their attention to a pivotal Fed week. Here's what's on deck. Tomorrow, we're going to get retail sales. That's for the month of May, a key barometer for consumer resilience. Economists expect modest gains, but any slowdown could raise recession worries. This is a big one. We're also going to see housing starts and permits, critical insights into construction and home demand. I don't see that moving the market so much, but we'll see. On Wednesday, we'll get the FOMC rate decision. They are widely expected to hold rates steady, but all eyes will be on the dot plot, forward guidance, and of course, Chair Powell's comments in the press conference. The market is looking for clarity on whether the first rate cut could arrive in September or maybe earlier. or maybe later. We'll get jobless claims and continuing claims. We're going to get those a day early because, as I mentioned, Thursday is the Juneteenth holiday. The U.S. markets are closed, so eco news will not move things on that day. Friday should be quiet on the eco data, but maybe by this time next week, we will have seen the Tesla robo-taxi rollout. This has the potential to be a market-moving moment for the EV and the AI narratives if early results are strong. This past week was a textbook case of how markets can pivot quickly from optimism to anxiety. While the inflation picture has improved, uncertainty remains high heading into the Fed's decision. Add in the Israeli strike on Iran and the July 9th tariff deadline, and we're looking at a market that is long on risk but short on conviction. What's the key takeaway? Be prepared for volatility. Some would say that the path forward likely hinges on Powell's tone and whether trade and geopolitical threats recede or escalate. I will tell you that I think it will all be about Iran and what happens there. My opinion is that the risk the market smells is that all the military might that was on display in Washington, D.C. on Saturday will end up being waved around with Iran and Israel. The message is clear. The question seems to be, will Israel continue to deliver it alone? So please keep Israel in your prayers, and please keep in touch with any questions. We're going to continue to hold risk audits of your accounts. Remember, when the markets are at this level, this is the time to do that. For now, stay safe and have a great week.